When it comes to calling the 2020 presidential election, there is a common misperception among investors. Lots of people believe solid economic growth will lead to an incumbent's reelection. Not so, says Morgan Stanley. Joining us to break down that argument right now is Michael Zezas. He is Chief U.S. Public Policy Strategist at Morgan Stanley. And Michael, what gives? I thought it's the economy, stupid. And if you are an incumbent president and you've got a good economy, you are golden.
Yeah, I don't think that's a reliable rule of thumb. So I'll give you three reasons. One, it's entirely possible that rule of thumb is a coincidence. So it's true, most incumbents with a good economy have won in the past.
When you say most, what are we talking about?
Well, I mean, so as far back as we have reliable data, including polling data, we basically can go back to World War II. And for the most part, those presidents who were incumbents had good economies, were reelected.
Who didn't? Is there an exception to the rule?
No, there isn't, however.
So it is a rule.
Well, but you've got a very small sample size, right? So it's entirely possible it's a coincidence. Okay, so of those quarters going back to World War II, 85% of them were positive GDP quarters. And on top of that, the current administration is sort of unprecedented within that. So all of those incumbents who had good economies also had net positive approval ratings. Now we've got an incumbent with a good economy who's never had a net positive approval rating.
Including when he was elected.
That's right. That's right. So, and on top of that, you've got data telling you that Americans might not care as much this time around. So Americans citing the economy as their top concern is at a 20-year low. And I'd say at least an equally good rule of thumb has been the survey that asks, which party do you trust most to deal with your top issue? And the Democrats are actually ahead of the Republicans on that. So that's not to say that...
What's the top issue, if it's not the economy?
Healthcare, probably. Right?
It's immigration and leadership are two issues ahead of that per the Gallup survey. But I think the larger point is that investors aren't necessarily supposed to look for any of these rules of thumb. They're supposed to look at this and say, this is a close race and we need to behave when we're investing in 2020 like this is a close race. That means more range-bound markets, more volatile markets. You're supposed to look for sectors that are going to be shock absorbers as the polls kind of swing back and forth. Healthcare, tech, financials, energy. And we're supposed to have fundamental cases for how to be reactive in those situations.
You think investors are taking this too much in stride at this point, that they haven't put the proper concern into what could potentially happen? Or what are you saying? If people are relying on that rule of thumb, what are they doing wrong?
They're probably too overconfident in the fundamental case for some sectors in particular, tech, energy, financials, and healthcare.
So you would say sell some of those issues or stay away from them, don't add to positions in those sectors?
No, I think what we can know from historical precedent is that what tends to happen in these situations is that investors will tend to overreact to certain pieces of data, telling you that one party is sort of rising in probability or the other, and things tend to be a little bit mean reverting. So if you think about what happened to the health insurers last spring, there was a substantial underperformance versus the S&P 500 on the idea that Medicare for all was about to be the law of the land in 2021. And then the truth of the matter was, well, if you accounted for the real probability of certain candidates, the size of a win that somebody would need to deliver a majority in the Senate in order to make that a reality, well, you very quickly faded it because you understood that most of the healthcare reforms that are less severe than Medicare for all, those were much more likely to be realities.